Hello traders, Gary Wagner here, just about 11:20 in Honolulu, 4:20 in New York. It is Thursday, November 17th, 2016, and this is the Daily Report for Gold and Silver. Although we do have the precious metals under pressure today, and both gold and silver trading lower on the day, we have truly seen it come off of the lows as we watch this market trade throughout the trading session here in the United States. Gold is closing off by about $6, and we've seen it really ramp up as we got into the close. Current print is 1217.90. That, of course, is COMEX futures. But the low traders today, and this is what's important, we'll look at it on a chart, but it is an area that we have spoken about as a critical level in terms of a support level that needs to be held if we're going to see any kind of base form in the market ever since coming and breaking below $13. It was 1210.50. The high 1231.10. So we have had a fairly substantial $20 range today, settling really midway through the range of the highs and the lows at 1217.70. Puts it off about 0.5% on the day. Now, silver is taking it a lot harder, down about 1.33%. Down 23 cents and below, far below $17 at $16.69. Again, this is silver futures, the low $16.57 and the high $17.08. So we're certainly closer to the lows than the highs, and we are closing under pressure, as I said, off about 1.33%. Now, really one of the big influences on the market today is that dollar index. It continues to surge. Dollar index at 100.94, almost at 101 on the dollar index. This is absolutely a high that we have not seen since about 2003, as we spoke about yesterday. And when we look at the range itself, 100.96, that's the high of the day, so we're just two small ticks away from that. The low on the day being 99.96. Unbelievable move in the U.S. dollar as we had Janet Yellen coming out and speaking today, and obviously concerns right now are that interest rates will be raised. It's been expected for a while that we'll see a rate hike in December, and that expectation continues to be strong. Let's take a look at our first chart. So traders, I want to start today's show off by looking at the dollar index. Dollar having such a dramatic effect and pressure on precious metals, specifically gold and silver. Consider this, we do have the dollar index well above the former triple top. At this point, we had a double top, considering this level at 100. We took it out yesterday, but only by a slight margin on a closing basis. Today, though, we have a clear-cut and definitive move really above that particular price point. Now, in terms of how that relates to the actual price of gold, really today's move is pretty much predicated all on dollar strength. Consider this, gold itself closed off about $7. This is the spot market, of course, down $7.50 or a 60.61% decline. Only 60 cents of that is really due to selling in the market, and the 98% that is left is all really dollar strength. And I think that that is an important factor to take in as we look at gold. And with that in mind, let's go ahead and pull up our first gold chart. So traders, I've gone ahead and pulled up our daily chart, standard candlestick format. As I said on the opening statement, that the low today was about 1210. And if you recall from the last couple of weeks, we have really been focused upon this level in gold. It is a 50% retracement, of course, 50% retracement from the low achieved at the beginning of the year to the high this year that was achieved June and July. We had a couple of occasions when the market did hit this kind of a double top at around 1370, 1380. And then when we plot various levels, of course, we have our 50% retracement, which is precisely where these lows are coming in. These lines can be decisive. Take, for example, this 38% retracement level at 1250. We can see that at this point in October, it was a very supportive area. The market climbed up from there. Of course, This is where the election comes in. The election comes in, you have a tremendous spike in the market. That is this particular day here. It sticks out like a sore thumb because you can see that move up and a lower close. It has been under pressure ever since Donald Trump has been elected, but at the same time, we absolutely see some sort of a base forming here. And as I've said over the last couple of days, if we hold this area, we could look for a specific pivot point or key reversal area, meaning we've got that decline and that downtrend. A key reversal and pivot point would be some kind of candlestick pattern at an area that we are looking at, which is around 1211, which indicates that we might see higher pricing. Engulfing bullish would be one, a piercing line. These, of course, would necessitate confirmation. A three-river morning star, even a bullish harami. So there's quite a few patterns that we are looking for. But the fact is, we have been factoring in the high probability of an interest rate hike come December. Yellen spoke today. She's going to be staying the full term. And so what we want to do is to see whether or not gold prices can hold at this specific area and move higher or break below this area. And as I said, if they break below this area, there's a couple of levels that we would want to look at if in fact that happened. One of the primary levels being at around 1190, because as it would break down, you've got this area right here that comes in just at around 1200, which is this bottom here. And then below that, that's the only other price point where we can glean any kind of data, comes this particular price point. So traders, I kind of want to switch gears at this point and start looking at, as we go into the end of the year, beginning of next, what kind of historical data and what information we can glean from past New Year events, meaning how the market reacted at the beginning of a year. So what I've done, you can see these green arrows that we've got. This, of course, being 2011, 2012, 2013 here, 14 here, 15, of course, and then 16. Now, what we can say is this, as this market came down, and 2013 really doesn't fit this mold whatsoever. But if we take a look at the marketplace itself, here, the end of 2010, beginning of 2011, it continued to, gold prices continued to drop up until February. And then in February, they hit the bottom, and that was this dramatic rise. If we take a look at 2012, we almost have an absolute bottom that came in at the end of the year, beginning of the next. As I said, this is a hot knife falling through butter in 2013. So obviously, any purchase at the beginning of the year would not have boded well. But then take a look at 2014, take a look at 2015, take a look at 2016. The last 3 years, we have had the market either finding a bottom at the end of the year and then moving substantially higher at the beginning, or as in the case of 2015, it was already in a rally, but we had that acceleration. And then this year, we had the bottom, which occurred really December and January, and that's when we went to a really very, very strong rally in the market. Now, this is something we absolutely want to explore over the next couple of days and weeks ahead as we get closer towards the end of the year. And we also have to realize there's a huge caveat, and that is that this year is very, very different from years before it. Even with a presidential election in the mix here, it really doesn't account for what has happened on this presidential election, in which we have a non-politician who will be our 45th president. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.